Do you know you can invest in other countries without opening stock accounts in other countries? Do you know you can invest in all other kinds of weird things like wet wine, jeans, and weather using the same US stock account that you are using right now? Do you know using the same account you can leverage without bearing the margin risk? So I'm telling you 4 advantages of using ETFs. So today is Monday, again it's our educational video time. Today we are going to share 4 advantages of using ETF. It's a great video and really a great milestone for you to make your portfolio more efficient, so that using ETF you now have assets and exposed in a wider range and scope of investment assets. That means you have wider chance, more opportunities to profit. So what is an ETF? For example, if you invest in an oil ETF, which means that there's a company investing in oil and oil assets. So if you invest in that ETF, if the oil prices goes up, you should be profiting. So the company is listed in the exchange. So now you can invest in the ETF just like investing and buying stocks. So different from mutual funds, they're almost the same, but in the mutual funds you have to purchase and invest them in the banks and in the insurance company. Is pretty hassle, right? So it's really convenient investing in ETFs. So the first advantage is you now is exposed in a wider range of investment assets. Let's say if you go to the etfdb.com/types, this is a website that I'm visiting for more than a decade. This is really good. So it listed all kinds of ETFs that is listed in US stock. So now using just the US stock account, you can access to the whole world. For example, you can access to the bonds, currencies, and regions. So let's say I want to invest in Brazil because the year after the Olympic, it should be doing good, right? So I invest in Brazil. So you search Brazil, there are 10 ETFs about Brazil. So now let's say I want to invest in, let's say, a sector like banks. So you see, there's a bank, 2 ETFs that you can invest in banks. About natural gas, you can invest in all kinds of stuff. So this is kind of the assets that you can expose in the whole wide world using one same account. So let's say in the future, you won't have one news or one data or one thing that is going on in the rest of the world that you cannot invest in right now. So out of the Olympics, let's say I'm really bullish of the Asian technology. So you can go to technology. So that's biotech, of course, we're searching for technology. There's 65 ETFs that you can choose from to invest in technology. So you can choose the Asian technology, you can choose the US technology, which is iShare US technology, right? So that means they're purchasing, let's say, Snapchat or Google or Amazon, stuff like that. Or you can invest in Nasdaq, or you can invest in cybersecurity. So there are many choices you can invest on. There's an opportunity going on, you can invest in it. So now if you still lose money, you can focus on only solely yourself. So the second advantage is lower barrier of entry. Let's say, go back to technology. So if I like to invest in technology, right? So let's say I'm really bullish in the same thing, the Asia technology. So now I have to go to Hong Kong and invest in Tencent, and I have to go to US to invest in Alibaba. I'll go to Japan and invest in Canon and Sony, and then in Taiwan to invest all kinds of suppliers for iPhone and Samsung. So that's really a hustle. By then, I should be opening more than 1, more than 2, or more than 3 stock accounts. And then each one has its own barrier of entry. Then I think you are really rich in order to, like, not only rich in money, rich in time to search and invest in all the stocks. So now you can invest in just one stock. You can come here and find Chinese technology or Asia technology. Now, just by investing in one security, one ETF, you will expose the whole area. Of course, you will say that, oh, I'm really good at technology, so why not? I think Tencent is the best, so I have to go to Hong Kong and invest in Tencent, that's it. That's good. So now you can invest in your own stock. What if in the other sector, let's say green energy, you really don't understand, right? So you don't have the time to investigate or analyze the whole industry. So now you can go to clean energy or green energy, so that this ETF will be exposing in all the solar energy, water energy and stuff. So now you will have a chance to expose in this area without a lot of time investigating in this area. Okay, so this is a really good tool for you to use. Third advantage is now by investing in the ETF, now your portfolio will be more dynamic, more directional. How do I say that? For example, if I say gold, usually I can buy Barrick Gold, which is ABX, right? I think the code is ABX. You can purchase that so that the gold goes up, the gold company or the gold mining industries must go up, right? But what if it goes down? I have to sit back, or I can sell it, or I have to wait that's really boring, or you will be losing money with that direction happening in front of you. So now by purchasing ETF, investing in ETF, you see they're long, they're short, they're bull, they're bear. So which means that the short and bear ETFs, they are inverse ETFs. So now when the assets, the prices go down, you can actually invest in this ETF and you can profit and benefit from the downtrend, from the setbacks. So that is really good that your portfolio now will be more dynamic and more efficient. Not that, oh, now I'm really good at analyze or I'm really good at charting, but now because I don't have the tools, I cannot short and the downtrend happens, just have to wait. So the only chance you can profit is the price goes up. That's really bad, right? So let's say if there's an ETF saying Ultra Gold ETF that doesn't specify is long or short, that means it's bullish, it's long. So the gold goes up, you will profit by investing in UGL. So I think you can sort by the most assets or most volume, start with that. So liquidity is better. So GLD is the #1 Spider Gold Shares ETF. That's almost 1-to-1, no leverage. It's going up long, right? It's long position of gold. So it's trying to track exactly the trend of gold, okay? So if it is, iShare is the same. So if there's a short, let's say short, ultra short is leverage, double short is leverage. This one is 1-to-1 ratio short. If gold goes down 1%, you will lose 1%. So it's not 100% correlated, but it's really a good tool. It's more likely 0.8 to 0.9-ish correlation is pretty high right now. So you can see that the fourth advantage is leverage. So generally, if we want to expose in the leverage world, I have to expose myself in options or futures, right? That's generally 15 to 20 times leverage. That's really, really high, right? So now by exploring investing in ETFs, it's usually 1 time, 2 times, or 3 times of leverage. It's pretty mild. It's more softer. It's mild, right? So it's a stepping stone for you to learn. The second thing is usually if you invest in options and futures, there are margin risks. If you reach the margin level, if you don't have enough cash, they will cut it off. Okay, but now investing in ETFs, all the margin risk is bared by the companies, the ETFs. So you don't have this risk. Of course, there are still risks, right? If you guess the direction wrong, you still lose money. That's really the truth, right? You cannot get out of it, right? So, but let's say how do you choose the ETFs right now? You see the ultra usually means 2 to 3 times. Ultra short usually means 2 to 3 times inverse. So if gold goes up by 1%, you'll be losing 2 to 3%. That's really hardcore fact. But now, if you lose money, it's purely almost your fault, your issue, right? So now you can finally focus on how to optimize your investment strategies. So let's say it's that 3x is literally 3 times long, right? So you have to focus in one, the direction of the ETF. The second one is how much leverage is using this ETF. For example, UGLD is 3 times long. So now you see the US is going through the interest rate hike, then you will see that US dollar will go up. So now you probably want to buy something, invest in something in short, right? Short or bear ETF, so that you can profit from going down. So this one signal. Remember, there's another video that I talk about 4 signals that show that it is the end of stock markets, right? One of them is gold. So you think if the stock market is near the end, gold will going to go up. So that is for a hedging purpose. So you can long gold position without selling the stocks. So now, when the stocks is going down as you expected, you're losing money, but you're profiting from gold because people are afraid and buying gold. So now it's balanced out and hedged out, right? That's called hedging. It's really good tool, good strategy to use. Another thing, remember I use is VIX. If market is panicked, market is really scared, then VIX must go up, right? So now first you can sell your stock. So you can purely profit from the gold and VIX. Or again, you can hedge. Without selling the stocks, let's say I bought Amazon or Google or Home Depot at really long price, that's exactly what I'm buying right now. So I really don't want to sell the stocks because I'm investing in long term. I'm not speculating. This is my direction. So now I'm not selling it, but I'm still afraid of the short term setbacks. So I can long VIX, which is in the below, right? Mid-term volatility and short-term volatilities, right? So you can purchase and invest in this ETF. Which direction? Should be long. So up is scared and panic. Gold is up and long is scared and panic. That is, you can benefit from buying long positions of these 2 assets if you are afraid of the stock markets coming back down. So that's basically my education. Now I suggest you do your homework right now. Really good step that you can really increase your efficiency in your portfolios, and now you're exposing yourself in a much wider opportunities to profit. So now I try to see more and more comments going on, so I try to reply every single one of them. So I'm currently in Hong Kong. I have staff of around 30 people. So now I'm the first one. I'm purely myself. I'm recording, starting camera, and I'm replying each of your message. So if you want, and if time comes, if traffic is more, I can really put more effort in opening more educational videos. So in the Asia side, I have 200 and 300 free videos. So I will keep on translating, I will make it in your English versions, and I can still see the void in investment learning, so that people are either knowing nothing to only listening to tips. I'm kind of in between. I believe that you guys, or in the world, the movement is that I really don't care about losing money, but I really want to know the reasons behind losing and profiting, so that I can optimize my investment strategy. It doesn't require your time, it's not speculating, it's just some knowledge that gain in your head, in your brain, is for long term, it's for lifetime. So hopefully I can do something in this movement if I'm right. If you think I'm right, please join my channel, like my Facebook page, and please share my videos out to your friends. Please leave me comments. I really want to talk to you guys from Sydney, from US, from Canada, some of them from Asia, but most likely from these 3 countries. I want to see more of you guys. So I'll see you next time. Usually in other weekdays, I have 1 or 2 another videos analyzing or in mid to short term about the stock markets and housing markets. So you can subscribe my channel and I can push the videos in front of you. That's it for now. I'll see you next time. Goodbye.